Welcome back. You're watching Sunday Agenda on Sky News. Jim Johnson is an American banker and businessman who's also close to the democratic political process. He was at the heart of American banking in the lead-up to the global financial crisis and is very much an insider in the Obama machine. I caught up with him during a recent visit to Australia as a visiting fellow at the US Studies Centre. Jim Johnson, welcome to Sunday Agenda.
Well, thanks for having me.
There are signs that there is a recovery happening in the United States. Do you think there's a sustained recovery in the US right now?
I do think we're starting on a sustainable recovery. I think the elements now that are coming together are very positive. I think we'll have stronger growth in the second half of the year than people have been predicting. People in the United States are consistently now adjusting their optimism in the right direction. Housing prices have stabilized, housing sales have gone up. There's any number of reasons to believe now that the recession will have ended in the second quarter, which I strongly predict, and I believe we'll have good, solid growth in the third and fourth quarter. So I think a number of elements have come together, but I think it's much more optimistic than any of us predicted months ago.
After all the bad mistakes, the greediness shown by some investment bankers and mortgage securitisers, and the excessive bonuses paid to some Wall Street bankers before the crisis, but also even after the financial crisis, I know you've been quoted as saying you think there's now a risk in over-regulating executive salaries. Why? What is the risk?
Well, I think in a capitalist system, what you want to do is have people participate in the profits that they help create. And therefore we have something called pay for performance. If you perform well over a period of time, you should be paid well over a period of time. And so what I'm fearful of is that if you tell people in major institutions that they cannot be well paid because they're going to be regulated, even though they've earned the money, I think those people will simply leave those regulated institutions and go into unregulated hedge funds and private equity firms and money management firms, because then you won't have the skill and success and scale that you have in the major banks, which is really what makes the world capital system work. The capital markets need major players, and they need major players with major expertise. And if you drive the best performers out of the system, that is the principal way for raising money for new companies, for expanding job opportunity, for expanding investment opportunity, you're going to have not as successful a capital system as we have today.
But it hasn't been successful in the past couple of years, partly because of excessive bonuses, excessive salaries, excessive profits taken from very risky behaviour.
Actually, I don't believe that at all. I don't believe any one of those three components. I don't believe that the problem of investment banks has been that they were broadly taking too much risk. There was too much risk in the subprime mortgage area, which had some contagion then to other areas. But if you look at the dozens and dozens and hundreds of businesses that J.P. Morgan has, or that Morgan Stanley has, or Goldman Sachs has, overwhelmingly they were profitable, and appropriately profitable, because they were providing a service, they were charging a fee, and they were paying the people who made the money a portion of the money that was made. So I don't consider the institutions to have been sick. I consider there to have been products that were sick, assumptions that were made about the performance of securities that were wrong, but I don't believe that condemns banking as a greedy or an area of the world that doesn't understand risk properly.
Did those banks play a role in almost bringing down the whole global economy, and certainly very nearly brought the US banking system unstuck?
I think they all played a role. We had a bad mortgage product that was securitized at a very high level, and nobody understood or estimated what this would all behave like over a period of stress, extreme stress. Now we know that, and I think what we have to do is fill in the gaps in regulation so that we have more review of what's done, more review of the product, more review of the securitization, more review of the capital markets movements. But I don't think being knowledgeable and reviewing this means that the government should be intruding and deciding and selecting winners and losers and telling people how much they're going to get paid and taking over the functions of a free market system. I am not a government interventionist except in the sense of regulating broad flows and understanding the consequences of systemic risk. I think that we didn't do a good job on understanding the full dangers of the subprime mortgage product, but that doesn't mean we can't in the future. For the last 60 years, mortgage product has come and gone in the United States, and this is the first mortgage-related meltdown. I think we've learned our lesson.
Who were the real villains of the subprime crisis? The borrowers who never had a hope and knew they could never pay back loans, or the bankers and the securitizers of mortgages?
I think up and down the system, there was too little attention to quality. When I was the CEO of Fannie Mae during the 1990s, we were constantly focused on whether or not the buyer had the capacity to repay the mortgage. We were constantly focused on how the mortgage should be structured in such a way that we reduced the risk that it wouldn't be paid back. We constantly worked to minimize foreclosures. And I think what happened in this process is that the subprime lending community saw the potential to have a different kind of mortgage product which could reach more people, but that was dramatically riskier. That went into a securitization system and a rating agency review of that system, which proved to be completely inadequate in terms of giving investor protections and market protections. And I think we've learned our lesson. One of the things that we cherish, I'm sure you do in Australia as well, is people being innocent until proven guilty. And one of the things that's going on now in this crisis is that there are a lot of people who are being accused of being guilty who aren't guilty. Now, we'll see in the end how it all gets adjudicated, but my view is that we should all show considerable care in terms of making accusations of people who've been in the middle of this system.
You were a very early supporter of Barack Obama. So much is expected of him. Can he deliver, in fact, all the promises that he's made?
I think it's a real challenge because he said basically every dimension of where American leadership is needed, every dimension, almost every dimension of educational, social, and economic policy needs to be looked at again. He has an extremely ambitious agenda. We have so many things going on, and certainly he's not going to get every word of everything he wants, and every expectation will not turn up fantastically successful. But I think he'll have a very good record. I think he'll be reelected when he runs in 2012. I think the American people think that his combination of personal attributes, intellectual skill, balance, commitment, is just what they want right now. And there'll be policy differences as we go along, but that's fine. I think he will be a very successful president.
American businessman and banker Jim Johnson. And that's all we have time for this morning.